If your income's only $60,000 a year and you claim $60,000 because you've got all those unused caps and you put $60,000 into super, you don't want to claim it all as a tax deduction because you could have earned $18,200 without paying tax at all.
Yeah.
And in a few years' time, the tax rate over $18,200 is going to be 14%, and it's costing you 15% to put it in. So you can see to put it into super, sorry. So you can see there's that problem of guessing, because you've got to put it in before the 30th of June, what your income's going to be. And there's an easy way around that, in that when you put it in as a lump sum, you don't tell the super fund yet whether you're going to claim a tax deduction or not. You get them to send you out the form, and as long as you lodge, it's either the earliest of the end of the following financial year or the date you lodged your tax return, you have to tell them what portion you're going to claim and what portion you don't. As long as you do that, they'll only take the 15% out of the what portion you tell them. So that means you take it to your accountant when you do your tax return, and they will tell you how much to claim.
Yeah, they do the calculations for you that says what's the best situation in terms of what to do. And again, that's the biggest problem we have around super is the tweaking that keeps getting done by governments in power. And so one of the things that we can almost be guaranteed that there will be further tweaking over the next 5 years, 10 years and beyond as they try and get the balance right. I mean, there's obviously the big one that Labor will try and get in, which is around the tax level that you pay based on, is it 3 million that you have in a super fund? So we won't go there, but that's the sort of next bit of policy that the government will come after to try and raise tax revenues to pay for the debt that we've currently got. Now let's move on to the non-concessional contributions. And so this is basically where you can make contributions to your super, which is effectively sort of after tax. What we were talking about there. What's the ruling for people who are aged between what is it in terms of, is it 18 to 74 in this case, or is it still 18 to 67?
No, for non-deductible contributions, it's 18 to 74, and this is the ideal place for your inheritance to go.
Yes.
So you're allowed to put in $120,000 a year for that, and there's a draw forward provision that instead of giving you give up the next 2 years caps, draw it forward into this year, and you could put $360,000 in. Now that's providing you can't even put the $120,000 in unless your super balance is under 1.9 million. And then there's a stagger down to 1.66 million as to how far you can draw forward, which is in the notes. People don't need to know those numbers. They're all there in the note.
Yeah, well, we've got a table that we'll have in the downloadable, but also if you're watching this, we will have the table come up so you can see what we're talking about here at the moment.
And if you get you want to put more than 360,000 in, you don't want to put 360,000 in this year and have to wait a couple of years before you can put the next lot in. What you do is you just put 120,000 in this year, and as soon as July ticks over, you put the other 360,000 in. So you really got your 480,000 in that time. And maybe just go to the table in the blog, but I want to say it's that you must pass the work test to put anything deductible in contribution into super once you get to 68. Yep. But to go under the 5 years, to draw back the other 5 years, you have to have under 500,000 in super. You don't have to have under 500,000 in super to put the 30,000 in.
No, so my bad. I've read the table slightly incorrectly. When you're looking at the table, the 30,000 must have the work test. That's the linkage there, and then can access unused cap for the past 5 years. That's the super balance under 500,000 and the work test. And then over 75, is there any other deductible contributions that we can make?
No, your employer can still put something in under the guarantee, but there's no deductible contributions and no non-deductible contributions, so other than a downsizer contribution.